Hello all, welcome to learning about the Iron Condor. Now, before we get in, I'm working off of the assumption that you guys have been through the videos on our Options 101 course here. So we will be talking about several terms that we learned about in Options 101. If you haven't gone through that, please start there. We are going to be talking about the Iron Condor strategy. Now, PeakBot does automate the Iron Condor strategy. However, I'm going to be talking about how do we trade this manually, right? Our preference is to automate everything that we can, eliminate human emotion, human error. But if you did want to trade this manually, as you might with our alert system here, we're going to get into what the Iron Condor is, how to set it up, and just the basic theory behind the Iron Condor. So the Iron Condor itself is a neutral strategy. Reference back to our video on credit spreads, we are selling both a put credit spread and a call credit spread. And that creates the Iron Condor. And I'm going to pull up a diagram of that from Tasty Trade. Tasty Trade is one of our broker partners. They have a lot of great educational resources. So I'm going to add this here. And here we can see an example of the Iron Condor. Now, before we get into what these numbers mean on screen, I want to tell you that the way that PeakBot trades the Iron Condor is we're going to enter positions daily. And we like to enter positions on or a little bit after 12 p.m. Eastern. That gives the market some time to settle down, and we don't have to worry about that morning volatility. And then we are setting up 1 day till expiration contracts, 1 DTE contracts. So if I were to set up a position today or open an Iron Condor today, it would be expiring tomorrow. We're avoiding the pattern day trading rule by doing this. And we're allowing ourselves to enter into a new position every day. It's been working out. We've been publishing results on this. Results have been pretty great doing this. And we will set up our strike prices at the straddling the 25 delta. So the example that I'm going to be giving on screen is not going to be straddling the 25 delta. Because when we do straddle the 25 delta, the way PeakBot trades this strategy, we are setting up a $1 spread. And a $1 spread means that we essentially have a max loss of $100. And that's not even our true max loss, because we do have to factor in the premium gained to get to our total max loss. So we could go through the numbers in just a bit. I'll use the example on screen, but just know that when you're setting up the Iron Condor strategy, trading it the way PeakBot does it, it's going to be a little bit different from this diagram, but that's okay. Our alert system is going to tell you exactly what strikes to buy and sell. So you set up your put and call spreads in the right places. We're going to give you the estimated amount of premium you're going to earn. We're going to show you what your max loss could be, as well as what your probability of profit could be. So when looking at this on screen, we're going to look at this middle number here, this $500. This is the assumed midpoint price. So let's just say that we were trading, let's say we were trading the SPY. We were setting up an Iron Condor on the SPY, and the SPY was trading right around $500. So $500 stock price. The way that we might want to set up an Iron Condor is we would set up a put credit spread, and we would sell a put at, in this case, in this example, the 450 strike, and we would buy a put at the 400 strike. So that creates our put credit spread. And we could see this green shaded area. This is where the stock price would have to finish at expiration in order for us to realize some sort of profit. And I'll get into the numbers in just a little bit. And then this red shaded area, this is where our losses would take place. So on the left, we've got our put credit spread. Now, again, we would be selling the 450 put, buying the 400 put. If we were trading this the way that PeakBot trades spreads, we might do something like sell the 450 put and buy the 449 put to create that $1 spread. We're still going to be collecting enough in premium, and we'd be a lot closer to the money as well. Again, we are straddling the 25 deltas. And then we're going to do the exact same on the opposite side. So we're going to be selling a call. We're going to sell the 550 strike, and then we're going to buy the 600 strike. So we're giving ourselves the same width of a spread on both sides of wherever this midpoint is. So what are these other numbers on screen here? Well, this $1,200 number in the green shaded area, that's your total profit potential. Now, I could say from experience, if you're trading one Iron Condor using PeakBot strategy, the total profit potential usually ranges somewhere between $40 and $50 per Iron Condor. And then the red shaded area, this minus $3,800, this is your total potential loss. Now, again, when trading PeakBot's version of this strategy, your total potential loss is going to be, well, you got to figure out your max loss. So you take your max loss of, I just mentioned, $100, because we're just setting up $1 spreads on PeakBot. And then on average, we're going to be earning, we're going to gain on premium about $40 to $50 per Iron Condor. Let's use $40 for this example. That means your true max loss is only going to be $60. So again, the max loss of the spread's $1. So the max loss there per Iron Condor is $1 times 100 shares per contract. That's $100 minus the $40 in premium that we've earned. And then that equals our true max loss of $60. So to say it simply, the way that PeakBot trades this strategy is we set up $1 spreads. We are selling 1 DTE contracts. We are straddling the 25 delta. And by straddling the 25 delta, we're giving ourselves roughly a 70 to 75% chance to win this strategy, meaning, and to win, we need to finish, the stock price needs to finish between our sold put strike and our sold call strike. When that happens, we'll realize a full win there. Now, another modification that we make to this Iron Condor strategy to increase our win rate a little bit more, to close these out, again, we're selling 1 DTE. So if I enter a position today, after the market closes, I'm going to go in and I'm going to set up for both legs of my Iron Condor. So I've got, when you sell your Iron Condor, again, you're selling a put credit spread and a call credit spread. I'm going to set closing orders at 5 cents for my put credit spread. And I'm going to set another closing order for my call credit spread at 5 cents. So that way, when the market opens tomorrow, if things are going well for either leg of this Iron Condor, that position is going to close. And then I'm only going to have half of my Iron Condor still open. Now, again, typically, and this is just speaking from experience, typically we will see at least one leg of the Iron Condor close before 3:45 p.m. Eastern. Now, we close the other leg at 3:45 p.m. Eastern to avoid assignments, right? So if we are closing at 3:45, chances are we're probably going to take a loss for that specific day. But again, the losses, we're still closing out and we're going to win on one side of the Iron Condor. More likely than not. I think one time out of the past 3 months, there is a case where neither leg closed out. We just closed that market, still took home a win that day, which was great. But our whole point of closing orders closing legs at 3:45 Eastern at whatever the market's at is we want to avoid assignments, right? Unlike our wheel strategy where there's a chance that you could get assigned shares and you could potentially wind up owning shares those next day. We're completely avoiding that. We don't want to own shares. We just want to keep selling Iron Condors over and over and over. So we're closing out of these positions completely. So that way we avoid assignments. Now, you can't trade this on every ticker. You can't trade this strategy the way PeakBot does on every ticker. Again, we're doing 1 DTE. So we're getting into positions every day. So that way we can continue to collect premium. There's a certain amount of tickers that this is tradable on. And that is the SPX, the SPY, the Qs, IWM, XSP, NDX, RUT. And I'm sure as time goes on and this video becomes more dated, there will be more tickers that add these 1 DTE options available. So again, to recap, we are selling 1 DTE contracts. We set up our strikes around the 25 delta. That gives us inherently a $1 spread, which means a $100 max loss. Our win rate is between 70 and 75%, depending on where the spread gets set up for that day. And all of this information will be included in our watch list. So that way you can go out and trade this manually if you would like, or you could have PeakBot automate the entire process for you. So thanks so much for tuning in. If you got questions, please use the chat feature on our website. We'll be happy to answer any questions you have. Thanks and see you at the peak.